The Dow traded slightly higher today, up 44 points, while the Nasdaq traded down about 15 points, I think, which clearly illustrated there was no major change of investor sentiment, just shifting of funds. Utilizing the graphics of candlesticks allows investors to gain much more insights as to what is acting as support and resistance levels. We use the T-line, the 8 exponential moving average, has a very simple concept. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a sell signal and a close back below the T-line. We can identify that this trend channel is in progress with the likelihood that they're going to come back up eventually and test the top of this trend channel. Doesn't necessarily mean it's going to go straight up like we saw last week, but it implies that it's heading in that direction, giving us a bullish bias probably for the next couple weeks. But also, we utilize another simple technique, the 3T line, which is a 3 exponential moving average, which also works very effectively for a much faster identification of a reversal. As noted today, you could see the Dow came back and used the 3T line as support, indicating that if they're above the 3T line and the T line, the bullish strength is relatively strong, continuing the uptrend. Buying or selling or buying or going short a specific sector is also enhanced by utilizing a commodity or futures that allow you to dictate your analysis as to what that sector is doing. For example, light crude, we can see, had a big sell signal after a series of dojis in the overbought area, also implying that it might be coming back down into a lower trading area. This would also imply, as we can see, the big sell signal with stochastics heading down and a close below the T-line, that we can pretty much stay short on crude oil until we see a buy signal and a close back up above the T-line. This also implies that crude oil stocks are probably going to be acting weak for the short term. Whiting Petroleum, for example, you can see the little kicker type signal breaking this support level at the 50. And this is where you can now use all your other pieces of analysis that everybody else is watching, which might be a Fibonacci retracement number, seeing how far it will come back down, or checking out other moving averages. But if there's nothing down here to kind of put your teeth into, the next best thing is you stay short until you see a candlestick buy signal. So the major question always is, what do you do about trading going into earnings? Today, Netflix reported after hours. But during the course of the last few trading days, you can see that it topped out, came back below the T-line. Again, our very simple rule is that if it closes below the T-line, you want to be out of your long positions because there's more likelihood that things are going to the south if you're trading below the T-line. Today, sometimes would give you an indication of who thinks what the smart money thinks is going to happen to earnings. Had this been a big bullish engulfing signal or something else that showed a lot of strength going into the close, that would imply that the people in the know were thinking their earnings were going to be strong. With this doji type day below the T-line, it didn't give us any indication of whether the bulls are in control or the bears are in control. We saw after hours with the lower earnings that it's trading down in this range. So candlestick signals not only tell you when to be out of a trade, it tells you when not to be in a trade. That'll be it. We'll see you in the chat rooms.